Okay, ladies and gentlemen, I think we need to take a moment of silence for the tariff man and the money lost in the markets today. And I'm going to explain to you why this actually isn't nearly as bad as everyone's making it out to be. And I'm going to show you the different asset classes and how they're affected by this news. So let's jump right into this. Welcome back, my passive income investors. Today I'm taking it easy. It's a civic holiday here in Canada. I'm wearing my robe. I've just been relaxing, had a shower. I didn't even know what was going on until my girlfriend's father informed me of the U.S. market crash, and it wasn't really what I would call a crash, but definitely a mild speed bump in the tariff man's $300 billion warfare against China. And I want to explain to you why this isn't a bad thing, why this didn't hit my account as hard as I thought it would, but maybe that's because I sold a huge chunk of Apple off. I think if I was holding Apple as much as I was before, it would have really brought it down. But the fact of the matter is, my portfolio is making lower lows and higher highs. Literally a few days ago, guys, I was sitting at over $114,000. Today I'm sitting at $109,000. Last time Trump opened his mouth, I was sitting at $106,000. So we're seeing lower lows, higher highs, but that doesn't mean the markets aren't going to keep going down. But what we're going to do first, guys, is I want to head over to the computer and I want to explain to you what's going on. We're just going to analyze the articles, look at the asset classes and how they're being affected, because there's just so much interesting knowledge that comes out of these moments in time. So come on over, guys. Let's take a look. All right. Trump says U.S. will impose 10% tariffs on another $300 billion of Chinese goods starting September 1st. Let's just scan through this article really quick, and then we're going to look at a couple other ones. So our representatives have just returned from China, where they had a constructive talk having to do with the future of trade deals. We thought... Java. I need to update you. Still Java. Thought we would had a deal with China 3 months ago, but sadly, China decided to renegotiate the deal prior to the signing. More recently, China agreed, blah, 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 blah. We know what's going on here, guys. Trade talks are continuing, and during the talks, the U.S. will start on September 1st, putting a small additional tariff of 10% on the remaining $300 billion of goods and products coming from China into our country. Now, this is something I've talked about so many times in the past, as it affects all of our portfolios, and we can see how this is going to be affecting the portfolios, especially if you hold large U.S. Related to China kind of companies that dealing with either their factories in China shipping products here, or the fact that they're trying to sell a lot of products in China. If Donald Trump August 1st tweet that the U.S. will impose 10% on $300 billion. Obviously, it's going to affect a majority of companies dealing with China, and Apple seems to be on that crevice list. So Apple investors and consumers could pay a substantial price. Wedbush security analyst Dan Ivey's estimates that Apple would sell 8 million fewer iPhones. In a note, Ivey wrote, "The tariff news throws a mini wrench in the iPhone demand, which will weigh on shares. These latest tariffs could significantly increase the cost of iPhones globally." This, by the way, is still mainly speculative. The effort of tariffs could hit Apple's earnings per share, according to Reuters. Bank of America. Our back of the envelope math suggests the impact of the new tariffs will be roughly 50 cents to 75 cents annualized per share hit to the earnings, with roughly 0.3 to 0.5 from iPhones. Really depressing stuff. Let's continue to read. Of course, Apple's iPhone sales were tumbling before Trump's terrifying tweet. In the second quarter, iPhone sales fell 17%. In the third quarter, they were down another 12% to about 26 billion, according to Reuters. See, this is the problem, is that people are so focused on iPhones and they don't see the insane growth. Apple just proved it was a growth company by sales and just growth in wearables, and basically the ecosystem that Apple brings to its platform and users has been growing immensely. And this news doesn't shock me as much, because the fact of the matter is China is ripping you off. If you live in the U.S. and this bothers you, or you're one of those people on the forums that have been losing their marbles about basically what is going on here, you are an idiot. Sure, it is a lot of people think this is dumb, but the thing that is really dumb is the fact that China has been ripping goods off for years. I talk about this all the time, guys. China has literally been ripping products off from shoes, Nike, name brand, everything, Supreme products, and they've been selling them even back to our own countries. In fact, here in Canada, there's people that used to make jerseys, like hockey jerseys, and they were moving hundreds of thousands of
dollars worth, and then all of a sudden their supplier in China just ripped them off, and they saw their sales drop in half as literally the Chinese supplier cut them off and started replicating what they were doing online. It is a terrible thing, and Trump is just the man that's standing up to it. I wish Trudeau had the guts to do something similar. Obviously, it's going to affect everybody's portfolio in the short macro aspect of things, but in the long term, I think what he is doing is going to benefit much greater. It's going to affect the economy much greater. A lot of people think everything is just la-di-da in the markets and things should just work the way they are, and Trump's screwing it all up. But the fact of the matter is things aren't really that great. China wants to be a dominating power by 2025, and Trump's trying to prevent them from overtaking the country. Now, in comparison to some of the asset classes, the thing that I found most interesting was gold. A lot of people are starting to get back into silver, gold, and they're trying. I used to own like $30,000 worth of precious metals. I don't own any of it anymore. Literally not one. Oh, I actually own a couple ounces of silver, but they're just for memory's sake. But if we look in the U.S. here, guys, at the USD version of gold, we can see that on a 5-year chart, it looks like we are actually up quite a little bit. Not a huge amount, but a little bit. But let's look at the 20-year chart, only to be shocked and surprised that gold hasn't even hit all-time highs in the USDs. Which is quite staggering. And every other currency right now, because of the fluctuations, like let's take a look at the GPY. We're up to all-time highs. The AUD is all-time highs. Canadian dollars, gold is at all-time highs. The only thing gold is not high in is the US dollar, because the US dollars have actually been going up, and there's been a lot of fluctuations in that, but it's keeping gold at par, which makes it not the best investment. But you know what has been mind-blowing to me? That in a safe haven era where people are scared of what is going on, they're running to Bitcoin. Bitcoin has been on a tear lately in USDs. Every time Trump opens his mouth, we've gone from what, 9,400 all the way up to almost, well, where we're at now, 11,700, which makes me think that the gold bugs might be a little prehistoric in what's going on. I think there might be an actual revolution coming where people are starting to see these crypto asset classes is more of a safe haven and a protection against dollars and anything traded in dollars against what is going on in the markets. But in my own personal opinion, guys, this is why I'm a dividend investor. Honestly, no one could really foresee this coming. I got so bloody lucky selling Apple when I did. Take a look at the old AAPL here, guys. We can see that Apple has taken one of the biggest dips in a little while here. It isn't even fully reflected on this chart yet, but as we can see in the 1 day, guys, we've gone down quite a healthy little chunk, and this doesn't bother me at all. It doesn't faze me. The fact of the matter is so long as the market doesn't keep going down, we should be okay. And the weird thing in this market as well is things are selling off that shouldn't be selling off. I'm talking like the tobacco sin stocks, REITs, everything has just plummeted on this news, which to me is a buying signal, because again, fundamentals and facts are two different things, guys. And obviously, this is just a weird situation, but it's neat to see how much money just flooded out of the market. So let's just take a moment of silence to enjoy the fact that I have a good buying opportunity, and I have a crap ton of capital, about $6 grand sitting on the side. I'm just about ready to interject. So I hope you guys stick around, and look forward to tomorrow's video. I've been on break today, so I needed a day off, and I'm really looking forward to getting back into the groove tomorrow. I just had to make this video when I saw this news. So slap a like if this interests you guys, and keeps me motivated, keeps me pumping videos out for you guys. So stay cool, stay awesome, and I look forward to chatting to you real soon.